Hello, hello, happy Wednesday, and welcome to today's live Love Up conversation. Whether you're joining me live or catching me on replay, let's get started.
Welcome to Level Up with Winnie Sun. Award-winning financial pro. Get ready. Level Up with Winnie Sun.
Well, welcome to the show. I'm Winnie, your host, and we're Winning Financial Pro, Forbes contributor, and a CNBC Council member and contributor, and we're absolutely here live. So it's great to be here with you. I hope that you're having a great week so far. We're in the middle of the week. Happy Wednesday. Let's talk about the market. I wish I had good news. I know yesterday, if you're watching, was pretty good. We saw a lot of green yesterday, but currently the Dow's down about 101 point here, and the Nasdaq is still in the positive, up 47 points currently. S&P 500 is down about 2 points, and we literally have less than 5 minutes. Well, around 5 minutes to go before the market closes. So, I think it's pretty safe to say it's going to look somewhat like what we just talked about, right? It's one of those days. But not all days could be good days. We are certainly looking at, though, overall some good news. Stocks are hovering at a near record level, but there's been a lot of cautious information coming out on both the business front as well as the political front. And so that's also putting some pressure onto the financial markets. Now, the S&P 500 and NASDAQ are now closing on an all-time high. In fact, the S&P 500 edged within, get this, 0.6 to 0.9% of its February record. And the NASDAQ, well, it's doing pretty well too. It's between 0.2 to 0.6% of its record as well, easing, of course, due to the Israel-Iran tensions that we've been following very closely on the geopolitical front. But some of the ceasefire relief, that's supporting some of the settlement, but certainly there's still a lot of shakiness going on. I don't think we're out of the woods just yet. And so because of it, you're going to still continue to see some weakness on the financial market. So today isn't really that big of a surprise. I do know that a lot of people were thinking that yesterday the markets would be down lower, but there was some in the middle of the day better news, and I think some of that trickled in as well. Now, if you've been following financial news, you probably have also been following Fed Chairman Jerome Powell's talk about staying cautious. Now, he's been very deep in congressional testimonies, but Chairman Jerome Powell has said that, we really need to take a data-driven approach. This can't be political. It can't be how you feel. It can't be like, well, this person is calling me names or this person doesn't like me and people are giving pressure. It has to come down to numbers and data, and that's how he and his team are going to help lead us, hopefully, throughout this process of not going into inflation, not going into a recession, nothing like that. Or getting us out of inflation, I should say. So he's, of course, been citing tariffs and inflation uncertainties, and that the market should expect something around a 60 basis points of easing on interest rates by the end of 2025. But of course, we're seeing a lot of gains still continue to be in technology, defense, crypto, even electric vehicle battery names also are doing very well today. So overall, I would say today's kind of one of those days. You've got some names that are doing really well, and you've got other names that are not doing quite as well. But right now, as we know it, is currently interest rates are staying put. Even though I know President Trump isn't too happy about the decision, we've been reading a lot about his feelings on that. But there continues to be warnings about inflation and, of course, stagflation risk coming from Fed Chairman Jerome Powell. So regardless of how you feel about the economy or how you feel about the market, do know the overall feeling is that there's still a ways to go before interest rates will come down more for this year. But it does seem like everybody is cautiously optimistic, and it does look like there's intentions of the interest rate going lower this year, which for those of you who've been sitting on the sidelines looking to purchase another home or refinance, maybe, better days ahead for you. We continue to say that. So hopefully it'll start to be the fact, and we'll be able to report and talk about that soon. Now, speaking of other things, I wanted to share with you another article that came from the Associated Press talking about consumer confidence. We're talking about, again, about tariffs and inflation and how things cost. Well, a lot of people, a lot of Americans, surprisingly, are still feeling not so good. In fact, consumer confidence here in the United States fell sharply in June to a number called of 93, reversing sort of a brief rebound of feelings last month in May. Now it's approaching sort of that lowest point since the early part of the COVID-19 pandemic. Now, the reason that this has happened, they said that the drop in consumer sentiment is driven mostly by more concerns over President Trump's tariff policies, which consumers just feel that they're going to raise prices, things are going to cost more, and that this is also going to hurt job growth. And you couple that with other concerns, right? Like artificial intelligence and everything else. People are just not feeling so good. So, definitely a lot of concerns in terms of income, in terms of jobs, short term expectations. But now, this is now the sixth consecutive decline in job market perceptions, which suggests more concerns by the average American consumer. Now, despite the fact that the economy has added about 190,000 jobs in the month of May alone, still there is a 4.2% unemployment rate. And so, with inflation concerns, well, at at the end of the day, consumers aren't feeling quite there yet. They don't feel that optimistic, and there's been a lot of concerns. And let's face it, all this talk about bombing countries and nuclear concerns and everything else, that's not helping the situation either. So people have been talking a lot about that on social media as well as the traditional media as well. And speaking of media, I want to talk about a story that's come out of Fox Business as well as CNBC, and that's pertaining to the housing market. Now, we just talked about a minute ago, but house price growth now has slowed to just 2.7% year over year in April, which is the smallest gain in nearly 2 years. So, if you've been on the sidelines looking to purchase a home, hoping that interest rates come down, maybe, just maybe, things will get better for you because currently housing prices aren't growing quite as much. In fact, this is what's interesting. Only three of the 50 largest US metros, includes Detroit, St. Louis, and Pittsburgh, actually still remain affordable. And what do I mean by affordable? Well, there's sort of this 30% income rule, which basically means that you're able to afford a home in under 30% of your income. Well, nationally now, buyers actually need about 44 to 45% of their income for a average median home. So pandemic boom towns such as Tampa and Dallas, well, they're also seeing prices decline, even though during that time they improved, while places such as New York, Chicago, and Detroit, they've actually seen growth in their neighborhoods as well, which, let's be honest, those were some of the cities that probably got hit pretty hard during the early part of the pandemic just because of the density, right? But first time homebuyers now are increasingly priced out of the market, making it just 30% of May sales now, down from a historical average of about 40% for first time homebuyers. So this is a big category of people purchasing real estate. First time homebuyers, if they're not buying as much, this is something to be concerned about. Now, inventory, of course, has gradually increased. So a lot of houses are now available, but this still does trail pre COVID levels. So many homeowners now are reluctant to give up their ultra low mortgage rates if they were lucky to purchase during that time or refinance that time. I did. I refinanced and it was a great decision. But affordability does continue to get worse. Now, they're saying that even though things aren't great, a crisis probably isn't likely. They're saying that there's only about a 6% of sellers risking losses here, and then tight supply still keeps sort of the price floor on real estate sort of beneath the market. So we'll see how that goes. But overall, let's just say that housing prices aren't increasing as much as they used to be increasing. And so with that, let's move on to tech because there's so much tech news. I'm actually really excited to share with you. Now, If you know the company Nvidia. We've talked about that a lot on this show. Well, Nvidia CEO Jensen Huang has some news to share with all of you. He's saying, I know you all love talking about AI and all this technology, but do you know what's coming? What's the next big thing in his mind? He says it's all going to be about robotics. Yes, he is saying that right behind artificial intelligence, he sees robots, self driving cars, and factories as future game changers. And he's saying that right now, well, robotics is just about 1% of what NVIDIA includes in their total business model, but that is growing fast. They said it's up 72% in the past year alone, and he's expecting this to explode in the next decade. I don't know about you, but I actually welcome that. I would love to have a robot in the house. Now, I know you've heard me talk about this on the show. I'd love to have a robot come in and clean the house, do the dishes, do the laundry. That would be awesome. And I said before I jump in more, I want to say a huge hello to Sadiq. And I see Joshua on YouTube. Thank you so much for joining us today. It's great to see both of you. Well, NVIDIA is also saying that although their chips won't run robots the same way that it runs artificial intelligence, but there's a lot of other ways that they think that they can really power real world machines, such as self-driving cars and even future humanoid robots. So he's predicting that there's going to be billions of robots. With a show of hands, how many of you predict billions of robots? And how do you feel about that? That's most important. Maybe you all agree that robots are the future. Maybe you agree that there's going to be a lot of areas where robots can really improve things. But I want to know your thoughts of that. How do you feel about more robots? Do you feel like you would invite a robot home? Do you feel like you're going to take, a lot of jobs away? I mean, that's kind of a given, right? Especially if it's at the heels of artificial intelligence. But yes. So anyway, I just want to share with you what one very, very successful tech entrepreneur feels that the future is. And speaking of other entrepreneurs, let's also talk about what's been happening at Tesla. Okay, this is being shared on Yahoo Finance. Well, if you didn't know already, Tesla has unveiled their Robotaxi. Their Robotaxi, they've been testing it out in Austin, Texas, but it hasn't been going as smoothly as I'm sure they want it to be because it's been raising some concerns after videos have showed up of vehicles breaking traffic laws. Like some of these robo taxis have been speeding, making illegal turns, prompting the NHTSA to actually investigate Tesla's robo taxi. In fact, they're saying the robo taxi has been crossing double yellow lines, going straight from a left turn only lane, spotlighting safety and software issues. Then NHTSA has confirmed that they're in contact with Tesla and they're going to do like a lot of research to make sure their FSD or their full self-driving beta program is going to be okay. Meanwhile, Waymo, which is backed by Alphabet, the parent company of also Google, is expanding. In fact, they're launching full robo taxi service now also in Atlanta, Georgia, through Uber, and they're going to cover about 65 square miles. And they're saying with no safety drivers in those vehicles. So users in Atlanta now can actually summon a Waymo. And their cars aren't Teslas, but they're actually fully autonomous Jaguar I-Pace vehicles. So that'll be interesting to see. If you've ever ridden in one of these, I'm really curious to see if you like them or didn't like them. I'll be honest, I haven't tried one yet, but I am going to be visiting one of these locations that they have these soon, and maybe I'll get a chance to try one. I don't know. But Waymo currently operates in LA, San Francisco, Phoenix, Austin, New York City is coming soon. So we'll see. It does seem like they sort of have a leg up in the self-driving robotaxi world right now. Or yeah, but never underestimate Tesla. That's what we learned. So Elon Musk does claim now that millions of these Tesla robotaxis or just robotaxis in general will be active by late 2026. So we'll see how that goes. But I'm just most curious for those of you who are joining me live, whether or not you would do that. I see Sadiq talking about some Turkish origin engineer software. I'm not sure what that's all about, but Sadiq, always appreciate your insight. And yeah, if you want to expand on that, Sadiq, definitely feel free to. And let's continue on. I also want to talk more about what's happening in the AI agent space. Because if you haven't, I know we've been talking about AI, technology, chips, all that, but then let's talk about AI agents. I just found out from one of my colleagues that in the financial industry and our company in general too is that now a lot of companies are bringing AI executives, right, to lead their AI initiatives and to test out more AI agents as well for intra work as well as eventually working with the outside consumer or customer or client as well. Well, now there was a big lawsuit about where this AI learning could come from. This is being shared from the Washington Post as well as CNBC, talking about how a US judge just recently ruled that it's legal for artificial intelligence tools like Anthropic's Claude, which is owned by parent company Amazon, to learn from published books without having to ask authors first. Much like how people read to get smarter, AI is now allowed to read books to get smarter as well and to train these AI agent tools. So Anthropic's Claude is doing this. The court has ruled that this is fair use, saying that AI wasn't used in copying the books word for word, but learning patterns to create something new, just like a student studying from an essay, for example. But here's the twist. Anthropic may have started by downloading pirated or illegal book copies, and that's why they still have to go to trial. So they're going to have to answer on how they got the books in the first place. Now, the company says that it later bought proper versions, and they argue that it was all part of building smarter, more helpful artificial intelligence. But now authors are suing the company because they said they never gave permission, and they feel that it's truly unfair that they spent all this time working and creating these books, and to not even being told about this, not giving any credit or payment, that this is a big deal, which is kind of disturbing, right? For those of you who maybe you're creating a lot of social media content, or you're creating a video, or creating books or essays or whatnot, it just seems like this ruling is saying, well, I mean, it wasn't copied word for word, but people can learn from it. But I would say this, I mean, if you look at publications like published research, right, from college professors or research house on NIH, for example, I mean, people do expect once the information is published that other people will learn from it. The question is now, is artificial intelligence isn't necessarily people, but artificial intelligence is learning from it, and that information is then going to be used by people. So this ruling is quite a big deal. It could actually shape how AI is allowed to learn in the future, and whether creators like you and I will get a say or even a slice and a little bit of payment from this, right? So the message currently is pretty clear. How you learn matters just as much as what you learn from, like school kids to supercomputers. That AI is definitely here, definitely growing. And this case just raised like a bigger question that we all really need to ask ourselves. And that is that what's the right way to build smart technology while still respecting the humans and people who created the content that we're learning from? Yeah, this is a big, big issue. And I mean, good for the court to be able to figure this out. I just feel like this will set precedents, but also it's almost a philosophical question for all of you to feel an answer as well. Like, what's fair? Who needs to get paid? At the end of the day, let's face it. Someone wants to get paid because they wrote a book and spent a lot of time, a lot of energy doing the research, and maybe doing interviews and writing the book and making sure and doing all that, and then AI goes and basically learns from it. But let's be honest, before AI came along, other people were probably learning from that too. Now, let's continue on. I want to talk about what's happening with the financial industry. Okay, so NASDAQ and the New York Stock Exchange and the SEC, well, they got something cooking. And I want to make sure I share this with you. This is being shared on Reuters. The US stock exchanges and the SEC are now in ongoing talks to ease disclosure and regulatory burdens for public companies. They want to definitely help attract more IPOs. Because there's been a significant decline in the IPO industry. In fact, a whopping 36% decline in IPO listings since the year 2000. So they're proposing this new reform, which includes lower disclosure requirements. That's a big one. Usually, the financial industry doesn't lower disclosure requirements. Usually, it's the other way around. But they're going to be reducing proxy access for minority shareholders. They're going to cut listing fees to go public and ease capital raising rules as well. That's going to be really interesting. Easing capital raising rules, because typically it's very strict. If you're going to be a publicly traded company, for the protection of people who invest in your company or have to make the decision on whether or not to invest in your company, there's usually a lot of things behind the scenes of like how you're allowed to raise money, and how that's reported and what's okay and what's not okay. And so easing some of these restrictions, that'll be interesting to see how that unfolds. But these discussions do align with President Trump's deregulatory agenda, which he said is going to help build on the 2012 Jobs Act and past SEC efforts to sort of reduce regulatory friction. Now, as someone in the financial industry, I do love the idea of reducing regulatory friction as long as it continues to benefit the client, the consumer. And I will say this, sometimes we feel like there needs to be more regulation and things need to be more strict. But at the end of the day, if you make it so difficult for the financial industry to help people make those financial decisions and get them investing for a long term, well, then nobody seems to win. So sort of is like sort of that Goldilocks effect, not too hot, not too cold, and kind of finding something in the middle. So in this respect, I'm glad to see, and I'm hoping they can come with something that's mutually beneficial for both parties and makes it more conducive for companies to do business, and of course for more entrepreneurship and more small companies to be able to go public, to be able to raise revenue, to do more research and development and continue to be successful and build on the innovation that we have here in the beautiful United States. So that's all good. But let's see. This is something that I'm cautiously watching, but I do think if the right intention and things are done carefully, that could be good. There have been, as you know, there have been companies such as SpaceX has been talking about how they've been hesitate to go public due to some of the compliance costs and rules and regulations. So maybe companies like that will then decide that they want to do this. Who knows? I don't know. But I'm just sharing with you what I've been reading. Now, let's continue on with a story that came from the New York Times talking about Amazon and what they are doing. And get this, because of artificial intelligence, they are going all in and they are spending big bucks. Amazon is building a giant artificial intelligence campus in Indiana. Get this thing is going to be massive. We're talking 1,200 acres. Eventually housing 30 different data centers, which are big, and each of them bigger than a football field. Now, this new site will power artificial intelligence from Anthropic, which, as you know, is an Amazon-backed startup, which we just talked about. And it's going to handle tasks for complex things such as human thinking in the years ahead. Now, it's going to use enough electricity to power 1 million homes and millions of gallons of water yearly just to cool down Amazon's new custom AI chips. Now, Amazon in their latest chip, which is called the Trainium 2, has been designed to make it smarter, more energy efficient AI, and really to compete with tech giants such as Nvidia. Now, 7 buildings are already up, and about 4,000 workers are on the job every week to finish the remaining 23 centers. Now, Indiana State has given Amazon major tax breaks to do this, totaling about $8 billion over time to bring the facility to Indiana, hoping to make the state the biggest power Amazon is going to be the state's biggest power user, but I'm sure they're hoping also to bring in more jobs along with these this facility. But much of the energy, they say, will come from natural gas, and major upgrades to local utilities are already starting now. Amazon says that this massive setup is going to keep AI systems running, evolving for decades, and they say it can power everything from your chatbot to smart assistants to everything else in the future. Yeah. And speaking of Apple. And speaking of Amazon, and speaking of massive, we couldn't have a show without ending on this. And I want to talk about the one and only Jeff Bezos and his massive wedding, or massive wedding headache, maybe you would call it. This is being reported by the New York Times because Jeff Bezos and Lauren Sanchez are hosting their lavish wedding in the beautiful city of Venice, Italy, which historically is synonymous with grandeur and just beautiful. And, but there's been a lot of debate of like, wealth and over tourism. I visited quite a few years ago, and it was already back then like so many tourists. And I always thought it was funny because our guide said when you go to Venice, you'll notice that everybody walks really fast, and it's true. So if you're going to be going to Venice anytime soon, definitely pay attention to that. People walk really fast, and I thought I walked fast, but in Venice they walk really fast. Um, so of course Venice of course is welcoming this grand spectacle of a wedding. They're saying it's turning into a theme park for the elites. This is some of the complaints, of course. And in fact, there's protests going on saying no space for Bezos, and saying that if he can do a wedding that's this expensive, he can pay more in taxes, security, secrecy, super extreme NDAs for vendors, over 90 private jets that are coming in. This is going to be massive. Activists are putting up banners that if you can rent Venice for your wedding, you can pay more in tax. And it's just going on and on. But there's even talk that they even moved a portion of the wedding to somewhere else because of all the concerns with the protests and everything else. Yeah, it was crazy. And if you had a really nice wedding, then maybe and I had a great wedding. And I would just say that, like, it's not how much you spend, it's like the memories with your friends, and then like the memories that you build afterwards, right? That count. But I guess if you have this much money, maybe that's what people do when they have that much money. I don't know. I'll let you be the judge of that. But with that, let's let you know, of course, the market closed about 20 minutes ago. The market closed down. Dow closed down 106 points. NASDAQ closed up 61 points. S&P 500 down less than a point. Thank you so much, my friends, for being a part of today's Level Up Live. It is always a treat to be here with you. And do me a favor, like and subscribe to stay updated on all the latest insights. Level Up Live with Winnie Sun. It is such a wonderful time to be here with you. And you want to check out last or previous episodes, you can check out NASDAQ, Amazon Fire, Samsung, LG, and Roku. And of course, when sharing an episode online, thank you so much for all of you for tagging at Winnie Sun. I see the tags. I appreciate it so much. And it really benefits our show and everything that we do here. It is so, so appreciated. And with that, I hope that you have a beautiful week. And if there's anything more big, I'll definitely come back to share with you. But if not, I'm going to see you next week, okay? Because we got a lot of stuff happening on the financial space that we've been working on, and keeping really busy. I hope you're keeping busy too. And if you're on some parts of the United States and are really heating up, so with that, I hope you stay cool. Take care. Be well. I'll see you again very soon too. Bye-bye now.